I'm back with David Barrett from EBC Financial Group. David, are there any standout shifts or client interests that you've seen in recent months?
Where they changed their trading style because of the volatility that we've seen people being a little broader in the way that they're looking at markets. So we recently introduced ETFs. We have index offerings, and we also have a full suite of commodity offerings as well. But whereas before I think people were tending to granulate their exposure into single pairs or particular sectors, things like the ETFs allow them to take a step back. They don't have to choose the individual stock. They don't have to choose the particular pair. They can reflect a view across a broader instrument. And I think if we look at what they're doing, I do believe that the volatility that we saw in early April has tempered people's appetite to be all in all the time. And I think clients changing opinion of how they should reflect their risk means that they're using a broader array of products.
Commodities have shown unusual patterns this year. How are retail and institutional traders responding?
Commodities has been a bit of a strange one. I mean, we see a tremendous amount of gold flow. I think that's because it's been moving, it's been trending, and it's been a very popular hedge to all of the noise that we've seen going on. But I do believe that gold is a little different. The central banks have been massive buyers of gold. So that continuous demand over the last 5 to 10 years has started to really become part of the input of people's rationale of what they're doing. They understand that there's an underlying demand. But we've seen it in other markets as well. Oil's been a really tricky one. Geopolitically, you would have thought oil would be trading up in the stratospheres, but actually it's a very offered commodity because the fundamentals show that there is a huge amount of oversupply. OPEC have been trying to tighten unsuccessfully. Countries like Brazil, the US have come online. They're producing a huge amount more oil and gas. So as soon as you saw any kind of relief in the geopolitical situation, oil fell back very, very quickly. And the reason it fell back is because there are very clear supply and demand issues within those markets. And I think those kind of conversations are much more active with our clients these days.
Looking at your CFD offerings overall, how does EBC make sure that your clients have breadth and depth across global themes, sectors, and risk appetites?
Most of it's driven by client demand. So if you look at the way that we've developed the product suite that we've got, we started off with the basics and we built that out. The reason we bought in ETFs, for example, and the reason we bought in single stocks was because clients were asking. And you put it there, you educate, you try and get the message out. The marketing team do a very good job of explaining why we do these things, how it's relevant. They're doing more updates on specific economic events in other countries. So if there's something going on in Chile or Colombia, that's relevant to copper or other mineral imports and exports. So what we tend to do is we tend to add these things because the client wants them and then introduce them to the broader client remit because we can explain to them why people are looking at them and why it's relevant to what's going on. And that kind of being able to offer those different products means that you stay relevant rather than just being a singular sort of offering.
Thanks for watching. Learn more at ebc.com. Click now for more videos from this interview with David Barrett, and please subscribe for the latest international business insights from worldfinance.com.